Selling in the March 2026 Long Beach real estate market can mean the difference between a clean, confident exit and months of stress that quietly bleeds away leverage. Here's why. In Los Altos, single-family homes just clocked 1.5 months of supply in February 2026. And at the exact same time in Belmont Heights, there were exactly 0 pending sales all month and homes are gathering dust for 84 days. That's not the Long Beach market. That's two different games with two different rule books. If you want the calm version of what's actually happening, where your leverage lives, where it's gone, and how to avoid the most common pricing mistakes, this is the update you want to watch all the way through. If you're thinking about selling in the next 3 to 6 months, your real decision isn't sell or wait, it's this. Do you sell into today's specific lane, tight supply in some single family pockets, heavy friction in some condo pockets, or do you risk a different buyer pool, different insurance math, and different competition later? Because the wild card in early 2026 isn't just a headline about rates. It's the stuff that shows up in the deal-killing details. Coastal insurance costs, building insurance, and HOA pressure in condos, and buyers who are now so educated they can smell an overpriced listing from across the street. So I want you to picture a Saturday in Long Beach right now. In Los Altos, you'll see families looping the same blocks, slowing down at every new sign like they're afraid they'll miss their one shot. Then you drive 10 minutes and you're in downtown Long Beach, where condo buyers are touring unit after unit with a totally different energy. Less urgency, more comparison, more convince me energy. That's the theme of March 2026. I call it the sprint lane, the ceiling lane, and the bottleneck lane. Same city, completely different leverage. Now let's set the foundation in plain English. When I say months of supply or months of inventory, I'm talking about a simple clock. If no new listings hit the market, how long would it take for buyers to purchase everything that's currently for sale? For you as an owner, a lower number means you have more leverage, fewer competitors, less timing risk, and a cleaner path to net proceeds. For buyers, a lower number means less negotiation room and more urgency. A higher number flips that power dynamic. And in March 2026, the most important thing you can do is stop using citywide averages to make a street level decision. Your home doesn't live in Long Beach. It lives in a very specific lane. And if you want this translated to your exact address without guessing, HomeBot is the cleanest starting point. You'll see your home's value and equity track over time, plus the mortgage and buying power scenarios that shift as rates move. Then, when you want the human version, the what should I do next version, schedule a one-on-one strategy session with me, and I'll walk you through a pricing posture, a prep plan, and the timing trade-offs for your specific pocket. By the way, I'm Hernandez, your personal real estate advisor here in Long Beach, California, and I approach this the way I'd want someone to advise my own family. Data first, calm second, and always with a clear trade-off. Because the goal here isn't hype, it's a clean plan. Here's how we're going to use the next few minutes. I'm going to start with the single-family neighborhoods where speed and pricing power still live, so that you don't underprice out of fear or overprice out of greed. Then we'll go to the neighborhoods where the market is slow enough that mispricing turns into a real 5-figure problem. Then we pivot to condos and townhomes, because attached housing is behaving very differently right now. After that, I'll give you a short macro check and a development pipeline overlay so that you can see what could change your leverage before summer. So let's start with the lane where the market is moving fastest, where your leverage can feel almost unfair if you're positioned correctly. In Los Altos and the CSULB area, the single family pipeline is intensely tight and churning at a massive rate. In February, we saw 14 new listings hit the market, but demand was ravenous. Buyers immediately locked up 12 pending sales and 11 properties officially closed. This leaves an active inventory of 33 homes for sale, creating a hyper-constrained 1.5 months of supply. Properties are vanishing in a median of 7 days on market, which measures how long you have to endure disruptive showings before securing a buyer. The median sales price sits at $1.21 million, with sellers capturing 98% of their original list price. In plain English, What this means for you if you sell is that buyers are starved for options and acting instantly, but they are drawing a slight line in the sand on final terms, successfully negotiating a tiny 2% discount off day one asking prices. If you're an owner in Los Altos, you might be wondering, if I list now, is this going to sell fast or am I going to sit in stress? Based on the 7-day speed and the tight 1.5 months of supply, your safest posture is decisive positioning without ego pricing. If you're buying in Los Altos, the pendings keeping pace with new listings tells you that good homes won't sit. Your posture is prepared and decisive on the right fit, disciplined on everything else. Said differently, decide your standards before you walk in, not after you fall in love with the kitchen. Right next door in El Dorado Park, the single family scarcity is an absolute pressure cooker. We have 30 active listings right now. 16 new listings came on, 12 went pending, and 11 closed. The absorption leaves a microscopic 1.3 months of supply. Homes are sitting for just 10 days on the market, and sellers are capturing a flawless 100% of their original list price against a $1.05 million median sales price. Said simply, this pocket is behaving perfectly. Buyers are abandoning the idea of a discount and are paying full asking price in less than 2 weeks. If you're an owner in El Dorado Park, you might ask, am I at risk of overpricing and killing my own momentum? At a 100% original list ratio, the market is confirming that accurate pricing works flawlessly. If buyers are meeting the asking price instantly, your safest posture is extreme pricing discipline. If you're buying in El Dorado Park, move quickly on the right home and slow down only when the condition story creates a real risk. 2 more sprint pockets you need to understand if you're timing a sale. In Bixby, Knolls, and Cal Heights, the single family flow is incredibly robust. There are 28 active listings, 14 new listings arrived, 12 went pending, and a massive 20 closed. We are looking at 2.2 months of supply and a median days on market of just 11 days. Sellers here are actually pushing past asking, securing 100.3% of their original list price with a median sales price of $1.019 million. What that really means for you if you sell is that demand is deep and aggressive, generating organic premiums for turnkey properties. If you're an owner in Bixby, Knolls, or Cal Heights, you might wonder, how much pricing power do I really have right now? With homes closing over list in 11 days, your leverage lives entirely in the speed. If the market is bidding up properties naturally, your safest posture is meticulous, fair market pricing to ignite the bidding war. Moving on to West Long Beach, the single family market holds 9 active listings, 3 new, 3 pending, and 3 closed. Supply is a microscopic 1.3 months. Homes are moving in 9 days on market at an explosive 103.1% of the original list price, with a $660,000 median sales price. In plain English, buyers are fighting fiercely over entry-level scarcity. Alright, that's the sprint lane. Now the ceiling lane, where sellers can still do well, but only if they price like 2026 and not like their favorite memory of 2021. Now we must look closely at our absolute premium coastal tier, Belmont Shore and Naples. The raw data tracks these 2 areas combined, so I will share the unified numbers, but we must approach the strategy for Belmont Shore distinctly from Naples. Combined, the single family pipeline saw 17 new listings hit the market, swelling the active inventory to 40 homes for sale. Buyers secured 10 pending sales and 11 closed. The months of supply sits at a heavy 3.2. Properties are lingering for 56 days on the market. The median sales price is a hefty $1.8 million, but here is the critical number. The median percent of original price received has plummeted to 91.3%. In plain English, the pipeline is backing up. Sellers here are surrendering an 8.7% haircut from their initial expectations. Buyers in this luxury tier are hypersensitive to skyrocketing coastal insurance premiums, and they are ruthlessly grinding down sellers who test the market with unrealistic numbers. If you own in Belmont Shore, where the lot sizes are smaller and parking is tight, you might be wondering, am I at risk of overpricing and chasing the market with reductions? Based on the 40 active listings and the 91.3% reality, the buyer pool is actively flexing its leverage. If the market is punishing aspirational pricing, your safest posture is extreme realism to avoid going stale. Path A is to emphasize the walkable lifestyle, pricing exactly at recent comps to secure a buyer before they look at the 39 other active options. Path B is to test the premium market but commit to a mandatory mandatory price adjustments at week 3 if the market rejects you. The right move depends on your home's condition, pricing band, and risk tolerance. This is where a one-on-one strategy conversation matters. If you own a waterfront estate in Naples, you might be wondering, am I at risk of a weaker buyer pool? Based on the same 3.2 months of supply and 56 days on market, your trade-off is speed versus net proceeds. If you want a clean exit, your safest posture is impeccable presentation. If you're buying in Belmont Shore or Naples, you might ask, do I actually have negotiating power right now? The answer is yes. With homes sitting nearly 2 months and sellers bleeding 8.7% off asking, your posture should be analytical detachment. You have immense leverage. Aggressively stress test the property's carrying costs, especially insurance, and use that data to justify conservative offers. Now, Belmont Heights. The single family data presents an absolute warning sign. Only 4 new listings hit the market. Exactly 0 went pending in February, and 5 closed, leaving a razor-thin 7 active listings. This equals 1.5 months of supply. However, homes are sitting for a grueling 84 days on the market. Sellers are capturing a deeply painful 93.2% of their original list price on a $1.28 million median. In plain English, sellers are testing the absolute affordability ceiling, and buyers are outright rejecting those initial prices. Even with incredibly low supply, buyers are choosing to wait them out for almost 3 months rather than overpay, forcing a nearly 7% haircut. If you're an owner in Belmont Heights, you might be thinking, am I at risk of overpricing and chasing the market down? Based on an 84-day wait and 0 pending sales last month, the answer is a definite yes. If the market is actively penalizing aspirational pricing despite low supply, your safest posture is extreme pricing humility. If you're buying in Belmont Heights, you have leverage. Your posture is patient, comparative, and calm. Now, the rest of the single-family neighborhoods, because this is where citywide talks get homeowners in trouble, for Central Long Beach, single-family homes show 12 active listings, 7 new, 0 pending, and 2 closed. Supply is heavier at 4.1 months, taking 14 days on market to sell at 99.5% of original list, with a median sales price of $762,500. What this changes for you is that buyers finally have just a bit more breathing room to evaluate options. Owners, if you need to sell soon, pricing realism and presentation are your defense. Buyers, you can be patient but still move when a home is clearly the best value on the street. In downtown Long Beach, single-family homes show a tight pipeline, 5 active listings, 2 new, 0 pending sales last month, and the 1 closed sale. Supply sits at 2.9 months. That single closed sale took 34 days on market but closed at 105.1% of its original list price at $1.051 million median sales price. In plain English, low volume creates statistical noise, but it shows that buyers here take a month to shop around, and when they identify a premium home, they escalate heavily to win it. On the east side, single-family homes show 14 active listings, 3 new, 3 pending, and 1 closed. Supply is 3.4 months, selling in just 7 days for exactly 100% of the original list at a $675,000 median sales price. What that really means is that correctly priced homes sell instantly, but buyers have enough inventory to ignore overpriced ones. Owners, you can get speed, but buyers have enough choice to be picky. Buyers, move fast on the best. Slow down on anything overpriced for condition. Now, condos and townhomes, the bottleneck lane, because this is where sellers are misreading leverage. In downtown Long Beach, the condo market is suffocating. Last month saw a massive 30 new listings flood the market, swelling the active inventory to 137 units. Buyers managed only 9 pending sales and 29 units closed. This leaves a heavy 5.6 months of supply. They are sitting for 35 days on market, and the median sales price has compressed to $429, taking 99.3% of the original list. What that really means for you if you sell is a stampede in slow motion. Imagine 137 people in a crowded room, all trying to squeeze through an exit door that only lets 29 people out in a month. Buyers are scrutinizing HOA fees and walking away from anything that isn't perfectly priced. If you're a condo owner in downtown, the decision rule is this: win your competitive set early, not later. If you're buying in downtown, down, your posture is patient and analytical because building quality and HOA health drive long-term risk. Looking closely at the combined condo market for Belmont Shore and Naples, we saw 15 new listings and 37 active units. Buyers secured 5 pending and 11 closed sales. They sit at 4.3 months of supply, moving in a blisteringly fast 12 days on market at 99.0% of the original list at an $840,000 median sales price. The high supply but fast clearance means only the absolute best, highly upgraded units are moving instantly, while the rest simply are not. The condo market in Belmont Heights tells us an equally heavy story. We saw 9 new listings, 5 pending, and 5 closed, leaving 15 active listings. This creates 3.5 months of supply. Condos here endure a staggering 77 days on market and capturing 97.8% of their original list price at a $635,000 median sales price. Said simply, buyers want the area, but they are taking their time. In Los Altos and CSULB, the condo pipeline is sluggish. We saw 4 new listings and 13 active units. Buyers put 5 pending and 7 closed. Supply sits at 2.4 months, but the median days on market is a heavy 57 days. Sellers are returning 97% of original list at a $480,000 median sales price. What that really means for you if you sell is that even in a slower inventory pocket, condo buyers are paralyzed by high monthly carrying costs. They want the neighborhood, but they are dragging their feet for nearly 2 months to make sure the math works. Eastside Condos saw 8 new listings and 22 active units, with 7 pending and 3 closed. Supply is 4.1 months and 22 days on market at exactly 100% of the original list for a $475,000 median sales price. Said simply, buyers here are taking their time, but well-priced units clear in 3 weeks. In Bixby, Knolls, and Cal Heights, condos saw 3 new listings and 10 active units, with 1 pending and 4 closed. Supply is 2.1 months, sitting 17 days on market at $674,000 median sales price, receiving 99.6% of the original list price. In plain English, this is a highly efficient condo market where buyers are ready to act. Now moving on to North Long Beach. Condos had 8 new listings and 15 active units, with 2 pending and 2 closed. They sit at 4.8 months of supply, showing a strange 4-day on market anomaly at 98.6% of the original list on a $707,990 median sales price. What that really means is low transaction volume is creating statistical noise, and high inventory means most buyers are holding back. Owners, the right unit can move, but buyers still negotiate. Buyers, be decisive on the best, disciplined on everything else. Finally, in El Dorado Park, the condo market recorded absolutely 0 active listings, 0 new listings, 0 pending, and 0 sales last month. It is a complete inventory blackout. If you own a condo here, you have an absolute monopoly on the market if you list today. Here's the scoreboard so you can stop trying to make one headline fit your home. If you're an owner in the Los Altos or El Dorado Park single-family speed lanes, your velocity is entirely dependent on respecting the fair market asking price reality. Buyers are paying, but they are rejecting greed. If you're an owner in the Belmont Heights or Belmont Shore premium stretch zones, aspirational pricing is currently punishing sellers with 84-day delays and massive haircuts. And if you're an owner in the downtown condo market, you are fighting a brutal 137-unit bottleneck. If you want your address mapped out to the right lane in a sell now versus hold plan you can actually trust, start with HomeBot in the description because it gives you a living dashboard instead of a one-time snapshot. Then if you want me to pressure test your price and timing against your exact competition, schedule a one-on-one strategy session and we'll build your plan with 0 guessing. So that's the neighborhood math. Now let's quickly cover the macro forces such as the Fed and interest rates. First, the 30-year fixed mortgage rate has definitely dropped into the 5.98% range. Second, the Federal Reserve has paused the federal funds rate at 3.625%, though they strongly signal an easing path later this year. This shifts buyer psychology, keeping capital structured but creating an atmosphere of impending transition. Third, while the job market saw a headline gain of 130,000 jobs, there was a massive historic downward revision of 898,000 jobs to last year's data. Fourth, the Housing Affordability Index has surged to 116.5. This means you have a mathematically expanded buyer pool, but because of the fragile labor data, they are highly protective of their capital. If you list your home in the next 3 to 6 months, you cannot rely on blind bidding wars. Impeccable presentation and eliminating repair surprises are how you keep these capable but nervous buyers from walking away. Quick question, what's your biggest worry? Selling too early, selling too late, or pricing it wrong? Drop your answers in the comments below. Now let's move on to the structural change shaping Long Beach. More multifamily supply is coming, while detached supply remains constrained. The 101 on Pacific Coast Highway is a 52-unit permanent supportive housing community targeted for late 2026. The 1400 Long Beach Boulevard project is a 163-unit scheduled for mid-2026, and the AMCAO Linden apartment project is 100 units near the downtown edge. Over time, that steady stream can cap how quickly attached prices run because buyers have more alternatives. Let's restate our scarcity baseline. We have extreme single-family scarcity, but massive condo bottlenecks. Now introduce a structural shift acting like a vice grip on every transaction, skyrocketing coastal insurance premiums, and ballooning HOA master policies. Here's how it plays out. Deferred maintenance and insurance industry pullbacks have forced building HOAs and coastal premiums to explode. This breaks the traditional property ladder, drastically increasing the monthly carrying costs and killing buyers' purchasing power at the underwriting table. This lands squarely on the downtown Long Beach condo market and premium coastal belts like Naples, turning a steady stream of move-up buyers into a trickle. So what's the bottom line in March 2026? The central conflict is scarcity versus friction. Scarcity is still protecting certain single-family neighborhoods. Friction, payment sensitivity, insurance uncertainty, and buyer selectiveness is punishing sellers who price emotionally, especially in premium coastal and slower condo pockets. Waiting might help you, or it might drop you into more competition and a pick your buyer pool. If you're considering selling in the next 3 to 6 months, don't let timing become a vibe. Get your HomeBot dashboard set up from the description so that you can track your equity and laying conditions month by month. Then schedule a one-on-one strategy call with me and we'll lock in a pricing posture and a prep plan and a timeline that fits your goals, clean exit or maximum net. And if you want the next update as soon as it drops, like this video and subscribe. I'm Hernandez, and I'll see you in the next video.